Mike Rosehart show. We're live again like we are every Wednesday. And today I don't have a necessary, a topic picked out or anything we necessarily need to cover. Life's been good. What's been going on? Let me think here. What happened the last week? My portfolio's down the last 2 days. I took a six-figure dip on my portfolio, which is not a big deal, not the end of the world. Things go on. If you guys have any questions, by the way, drop them down tonight. It's all about whatever you want to talk about. So I'll leave it kind of open-ended. As you can see, it seems like God does not want this nasty, grisly beard to ever come off. It looks like it's going to be here for some time as it continues to elongate. It's just within this options trading portfolio, I continue to hold companies like SAM, NAG, what else do I? There's a few others that I have in there that have just been underperforming, and specifically SAM has really hurt. If we've seen the shares, and I even tried to average down. I increased my position from I think I have like 700 shares now in SAM, which is a considerable amount of my portfolio, and it's brutal. It hurts to think about the fact that it is down 65% year to date. For a blue chip like Fortune 500 company, that's horrible. They're being sued. There's a big lawsuit going on for the fact that they misled investors about their declining seltzer sales and a number of other things. Their financials were actually pretty solid. When I bought, even at like the current price point, it would have been like a 7 or 8 EPS. But then of course earnings tanked the last 2 quarters, so it's been rough. I'm holding because again, it's at the bottom. I think you probably get into SAM and do okay at 480. It's bouncing off of. I think it'll easily bounce back to 530. But I'm just gonna hold because it was trading at $1,300 a share, and at this point, why even cut my losses? I'm past stop lossing at this point on that. And Newegg, I continue to short that company until now I'm just getting rid of my hedge. And I had some calls. I thought would just get rid of my hedge at 15. I'm like, oh, for sure, just in October it'll just call it away. It didn't. It was just under. So I didn't get my shares called away. Sold more at 15 for November. Looks like they're not going to get called away. So I have to get rid of those neg shares that I have from when I hedged that huge short. When I was getting margin called, I had to cover by buying some shares to cover my short. And I think to cover, so my account didn't get blown up, I had to buy like almost $400,000 worth of shares in neg. And that hurts because today it's worth like half of that. But it is what it is, and I'm going to finally wind those out and a few other bad trades. My other portfolio, interestingly, I have an options portfolio where I dabble in. By the way, I've got away from a few things. Like I got too heavy in 1 or 2 stocks. I have 30, 40 positions in that portfolio, but I got heavy in a few positions that really messed me up. I got really heavy in some of those crypto companies, and they got really beat up, and then I got margin called and forced a loss on those. And there's a few other companies that I have to look at the portfolio, but a bunch of stuff that didn't do so well. Neo, I was in for a bit and it didn't do so well. Tesla, I rode down and then got out, and of course Tesla's mooned over 1,000 now, and I got out at like 590 when I broke even, which is, I didn't have diamond hands as it seems. But whatever you guys have, any questions, happy to answer them. Sold another couple properties off in the last week. I'm actively trying to get rid of stuff. Up on the chopping block, like I try to focus on one property each week or every 2 weeks. That's like my main focus. I'm selling everything, and you can message me at any time if you want to see the spreadsheet of what I got to sell. There are some vendor takebacks, small ones, where it'd be, instead of putting 20% down, you can end up putting like 5 or 10% down, and I put up the rest, and we can structure it as a second mortgage. I think I prefer that to the joint venture partnerships, just because I don't want the stress of having to manage a stakeholder or a partner. If I sell, it's a clean cut on my time. So for that reason, probably won't JV, but if the right person came along and wanted a JV, okay, fine, I'm open to it. But yeah, slowly getting rid of it. Up on the chopping block this week is our property, our fourplex in St. Thomas. It's a cash laundromat on the main floor commercial, and then 3 other units. They're all renovated really nice. It's priced at $499. There is a $100,000 vendor take back on there, so you would have to put that much down to take it over. So it'd be like, 300 and something thousand first mortgage you need, and a little bit of your own cash. But yeah, I mean, that's what's up on the block this week. So if anyone's interested in a fourplex in St. Thomas, hit me up. I got a little bit of flexibility there to move that one. It's the focus. It's currently vacant. It could also be I get a leasing manager to rent it out like that, like no problem. If you want it fully rented, the business comes with it, the laundromat and all that with it. I don't want to run it. I don't care. We have it closed for COVID right now, and the neighbors have been complaining that they have nowhere to do their laundry, which sucks for them because I'm not gonna send my partner doesn't want to drive to St. Thomas and deal with someone taking dumps in the laundromat washroom or making a mess just to get some coins. Like, who cares? 500, $1,000 a month, whatever. Like, it's rounding error at this point. But there are people out there who are still early in their journey who would drive out there, or if you live close by, who would go there and take care of it and run it and rent it out and all that stuff. Like stuff I used to do when I had the hunger, when my time wasn't worth $1,000 an hour like it is now. So let's go to the Q&A. See what's up in the Q&A. Julio says, I got 10,000 saved. What's a smart investment to invest in? Well, it really depends on a lot of factors, right? It depends on whether or not, sorry, my mustache hair's getting my mouth again. Ugh. It's a weird feeling when you're eating and like hairs get in your mouth. It's kind of disgusting. I can't wait to shave this off, but here we are. Smart investment. I don't know if there is necessarily like a smart investment. There are like more trendy investments than other investments. As an example right now, it's hip and trendy to be investing in NFTs and crypto. It's also like in the stock market, it's also trendy to get into momentum plays like Tesla, or even some of the meme stocks like GameStop. Those are like trendy stuff where people are hoping to like 10 bag. They're hoping to get a 10x return. I don't think Tesla's a 10x return. I think you might maybe get a double in the next 5 years. I don't know. But it seems like it is at all-time highs, and it seems like it's pricing in a lot of growth. Now, I love Tesla. It's an amazing company. Extremely bullish on them in general. Just their valuation is insanely high. It's like, I don't even know, 350 PE maybe? I'd have to go look, but just an insane price to earnings. Just a great company, doing a lot of great things, growing like crazy, but you're paying already for so much growth. And if they don't hit those growth targets, you've already paid for growth. And I don't like to pay for too much growth. I'd rather pay more for what they have done now, where they are now, how much they've accomplished now. And that's only a few $100 a share. The rest is all just speculative. But I guess you could spread it out in a few places. If I like 10 grand, probably what I would do is just go the real estate path and find a way to turn that 10 into 20 or to 30. But if you don't have the time to invest in real estate, then, well, I'm a little bit white, aren't I? A little bit too bright. Let's turn this down a little bit. There, is that better? There we go. Turn it down a little bit so I'm not so like ghosty. What was I saying here? I lost my train of thought. Oh, $10,000 to invest. So if you had $10,000 to invest, there's lots of places you could spread it out. One way is just go and buy like VTI, like the S&P 500, just buy some, whatever, SPY or whatever, one of the indexes that follow the S&P 500 on a down day. Just get in and put your money in there and you'll ride. Over 7 years, it'll double. That's a conservative approach, and that's also smart. If you want to be trendy smart, like, trying to get ahead of the curve or something and pick the next big thing, I honestly still think that some of the altcoins, and specifically Ethereum and Bitcoin, on the next dip are a great buy. Like if we see Bitcoin drop to, this is gonna be in Canadian dollars, I know everyone talks in the US, but like Canadian, like 60,000 on Bitcoin, I think that's a good enter. Another one would be, Ethereum, I think under 5,000, I'm still bullish on ETH. Ultra, my buddy's really bullish into the Ultra token. They're probably going to take steam on for reselling. If you're into gaming, you can now resell your games to other people or trade them on the blockchain using a token called Ultra UOS. That's one that I just throw $1,000 at that and see what happens. I got in at 50 something cents on Ultra, just for full disclosure. It'll be $1 shortly and probably go to 10, but I don't have that much money in it. It's like 18 grand or something. I just threw a little bit of money in it just for fun. But if you're going to dabble in that, I think that might be a place to, I don't even know if I have that much in it. But if you're going to dabble, that's a place to do it, I think, is in the crypto space. You could set it and forget it, buy some really great projects, diversify and spread it out. Like you can put a good portion in Bitcoin and Ethereum, look at it in 5 years and feel really good about yourself, especially if you can buy on a dip. I think then just don't look at it, stake it, whatever. Don't look at it for 5 years and then look back at it and you'll be pleasantly surprised, I think. But that's the same with any diversified investment. And I think it's important not to throw our entire net worths into crypto. I think cryptocurrency is a segment. It's it's tech. It's tech and finance, basically, right? You could argue that you're doing other things with it, but it's just tech. And if your entire portfolio is cryptocurrencies, you're missing out on huge segments of the market. And so I think as your portfolio grows, it's important to diversify. Put a couple $1,000s into a VTI, which is an ETF for the world index. Put some into the SPY. Put some into emerging markets, Brazil, Russia, India, China. Put some into all these places that you can kind of spread it out. A couple thousand here, a couple thousand here, a couple thousand there. Maybe a couple thousand into crypto. Awesome. Spread it out a little bit. But all you need is one to take off for you to have great returns. And at the end of the day, if one tanks and you put all your eggs in one basket, then that's no good either. So I think it depends on your risk tolerance. And when you look at it, your risk tolerance, you decide, hey, could I sleep comfortably losing a bunch of money? My risk tolerance is not great. Even a 10% dip has me, stressing, right? 20% dip, my portfolio has me stressing. So it's twice as hard to come back from a loss than it is to with a gain, right? So if you lose 50% of your portfolio, you need 100% to come back. So don't forget that when you're investing. Be smart, don't lose money, set stop losses, and diversify. That's important no matter what you're investing in. I think that's the key. Yeah. Next question, because that was the first one there, is from Frid. Do you think FIRE is still possible within a reasonable amount of time with how expensive living expenses have gotten in Ontario? So Frid, that's a great question. Sorry, I had something in it. Yeah, I mean, rent-wise, like if you're renting a place here in Ontario, things haven't creeped up that much. We're under rent control during COVID, so there are no rent increases. Maybe inflation guideline 2%, whatever. So rents haven't changed that much. As far as like here in London, Ontario, rent itself hasn't creeped up that much. You can still rent. Like I have a 3-bedroom, 2-bath detached bungalow near the downtown in London here that I rent out for $17.95 a month plus utilities. It has a huge yard, your own drive, like your own detached house with a full unfinished basement, $17.95 a month. That's market rent. Like you can still go on. For my brother, I was trying to help him out. I found him a place here in East London. It was a full detached bungalow, 3-bedroom. Some guy was just renting out for $1,100 on Facebook Marketplace, $1,100 plus utilities. So you can rent whole houses here, still in London, for $1,100. The deals exist. They pop up. The key is to find those bigger properties not near the college or university, and you'll have your picking of opportunities. Just stay away from the one bed. A lot of people go for the 1-bedroom or 2-bedroom. The 1-bedroom, 2-bedroom market there's a ton of demand and not enough supply. So I'd stay away from there and get a whole house and maybe get some roommates. There are ways to get your costs down as a renter. It's very easy to get ahead, I think, in this day and age. You just know where to look. And it's important that you be willing to be flexible and rent out part of the house. Maybe rent a bungalow with a basement and you rent out the basement, or you live in the basement and you rent out the upstairs to someone, right? And then boom, now you can live for almost free if you wanted to, if you sublet. And you're allowed to sublet rooms in your own place, assuming you live there. You have to occupy it for it to be allowed. Otherwise, you need permission from the landlord to sublet. But you're allowed to have roommates or whatever. A girlfriend could move in, or a friend, or anyone could move in into your own home. So lots of things you can do there to offset the cost of living. That said, like gas is up more recently. Like this is, maybe I'm talking the last like 6 months. Supply chain issues as a result of COVID have pushed the cost of gas up. That's a thing everywhere, not just in Ontario, but gas has gone up. Let's call it like 20% maximum, 15% on average. Food costs are up 10, 15%. Around across the board, we're calling it 5-6% inflation. So is there real inflation? Yeah. Does that mean you can't get ahead? No. What inflation means is the price of everything is going up. That's good. If you're getting invested in real estate and getting invested in stocks, whatever, inflation pushes valuations on companies to all new highs. Remember, companies like Facebook or whoever, Subway, whatever, I'm just picking companies at random, they can pass those increased costs onto their customer. So it's not a big deal. Now they just have more revenue. I don't know. It's just one of those things where, oh geez, that's a weird question. I'm not gonna answer that one. Ramen says, how do you think real estate will perform next year now that mortgage rates will be going up in 2022? So yeah, Ramen, I did hear about that mortgage rates were increasing, which sucks. I'm trying to refinance my house right now. It's going to go variable too. That sucks. I didn't lock in a rate. It is what it is. At the end of the day, my belief is most of my rental properties, if I still have them, which hopefully I won't, But if I still have a rental property portfolio or a portion of it, it's all fixed rate mortgages, pretty much all on 5-year fixeds. So I would not be affected at all by any increases, and all my properties cash flow positive. So again, not largely impacted at all by a rate increase. But in the open market, rate increase can lead to less ability to qualify and higher carrying costs. So typically, your NOI or net operating income statement doesn't have an interest expense line item on it. So if you ever looked at an apartment building or a duplex or whatever, and you've looked at the way that they price it, and you say, okay, how is this happening? You look at the net operating income statement attached. That's how they price multifamily. It's a cap rate or a function of the income. Everyone gets a different interest rate when they're financing a building. No one has the exact same interest rate. So typically, it's not affecting the NOI at all. You assume that the building's bought in cash and everyone gets their own financing in their own way. Someone buys in cash, another person does a 50% loan to value mortgage, another person goes a private mortgage and pays through the nose for it. So financing is technically not part of valuing buildings, but as interest rates rise, costs are going to increase for investors. So investors won't bid as much for property. So it should cool the demand a little bit on real estate. That said, I watched the market, we had interest rates rise through 2017, 2018, 2019, even 2020 before COVID. Things were at, it was not uncommon to get a 3.24 mortgage, 3.49 mortgage. Even when I started investing in 4 wasn't uncommon. It was like 4% was okay. The market still grew 20, 30% through 2017 to 2019. It continued to boom. So if we still have a supply and demand problem, which we do, they can't build enough for the amount of immigrants that are coming in. We have a supply side issue, along with the cost of rising building materials, et cetera, so forth. It's just one of those things where I don't think real estate is going to calm down until we fix that issue. There's just too much built up supply, and I think that raising rates a little bit isn't going to drastically cool the market, unfortunately. I wish it was. It'd be great to have a more balanced market, but let me sell my properties first before I have a balanced market. I think probably the way that, it depends on who gets elected, but I think Trudeau's current plan is going to continue to drive up house prices. It's in the Liberal government's best interest to continue to print money for the bottom half who don't want to work or have hard times, rather than handing out ladders, which is like opportunity. I consider ladders opportunities. Rather than saying, here's an opportunity for a job, it's like, here's just a fish. Forget the fishing rod. Just give everyone fish. And it creates inflation. They're going to continue to print money and create inflation, which will drive rents up and drive housing prices up for the next 5 years. I could easily see that happening. Let's call it 4 years until the next election. But Canada has gotten very socialist. Eventually, I will probably leave Canada 6 months a year. Just come back and visit Canada 4 or 5 months a year as a non-tax resident. That's probably my long-term goal. The way things are going, I hope not. I hope that we see a cultural shift, but people are very sensitive when it comes to, the divide that currently exists between the top and the bottom. The problem is they're not fixing the divide. They're making it worse. Inflation only helps the rich, and it crushes the middle class and the poor. They print themselves into a situation where the rich end up increasing rents 30, 40%, buildings go up 30, 40%, but the rich are levered. Their stock portfolios are levered. Their real estate, again, has mortgages on it. So they're levered 3, 4 to 1. They don't own the buildings in cash. So when they go up 10% in value, the wealthy person makes 30, 40% return on that 10% inflation. So inflation drives wealthy people. It drives their portfolios to new highs, and it makes them richer than they've ever been before. So when you print money to give it away as CERB and handouts and whatever and programs to the poor, the bottom half, you end up strangling the poor because their money doesn't go as far. If you give everyone money, the money's not valuable, right? The money is valuable because it's scarce. It just is a function that we can't all be equal. It's just unfortunately the way it is. Some people are less valuable than other people, not in a spiritual sense, but monetarily speaking. There's some people have valuable skills, some people don't. Some people have developed their skills over years. Some people have sat and watched all the Netflix that exists out there. No one cares if you watch all the Netflix out there. No one's going to pay you for that. Whereas if you spend all your time building a valuable skill like you're an electrician or an accountant or whatever, that's valuable in the marketplace. So it depends on what you spent your time doing. And there's a lot of people right now who spend their time doing worthless, useless tasks that were fun maybe for them, but provide no benefit to society. And that is what it is. Social media is the worst. It consumes all of people's time and gives them no valuable skills as a result. unless you're able to hone that social media expertise into a business or able to, leverage that skill set. But 90% of people won't and don't. So that's just my take. The inflation is going to push portfolios to new highs, and eventually it will end up in a crash. But I think we're probably 10, 15, 20 years out from that. And again, part of why I'm bullish on crypto is this collapse of our current fiat system, which is probably like 20 years out before we see any, and this will happen the same converging of people switching from a centralized financial system to a decentralized finance system, which is on the blockchain. We're not there yet. Like, we're a long way from people being able to pay each other using crypto and for everyone to be familiar with that and be comfortable with that. It all goes through the banking system right now. So we're not there. We're like 10, 15 years from businesses being ready, people being ready. There's a number of things infrastructurally that have to happen as well and culturally have to happen. But I'm bullish about the future, and I'm positive about the future. I just don't know about the future in Canada. In 15, 20 years, it might be a really bloody, horrible place if you're in the 1%. And unfortunately, I am in the 1%. So I could get out of Dodge in the next 5, 10 years, to be honest. Yeah, I can see them coming for our heads. I'm kidding. I mean our wallets, which is pretty much the same thing. How do you think real estate will perform next year now that mortgage rates are going up? So I answered that question. Now we're on the next one, which is Shaylin. Hey, Mike, sorry to hear the portfolio is down again. Well, it's not down again. It just is still down. I was $70,000 away from shaving this off last week. Should have just closed all my positions and just waited, invested in something that's like super safe, make like 6%, just wait so I could shave. Now I'm back down because I'm in the equities, right? There's volatility there. But it is what it is. So you said, we bought our first house in Alberta, and I don't trust the market here. But I love the area. What's the best way to hedge against a fall in prices? So yeah, I mean, I also love out west. The policy out there feels more like a red state in the U.S. There are a lot less socialists there, a lot less of a hating of the 1% there, and more of a resource-rich economy. So if as oil continues to do well and whatever for the foreseeable future, let's say, that would be good for the local economy. But yeah, how do you hedge against that? It's a good question. You could hedge in the public markets using like derivative contracts. Would be a way that you could hedge against your portfolio, going down. Trying to think if there's any other way that you can hedge, like other than the public markets. There's no insurance you can buy for a property to guarantee a price. You might be able to enter into a contract with someone, like a private contract, where they would guarantee a certain price. I don't know. It's tough. I can't think of a way to guarantee. It's a floating. Just in the public markets. That's the only way that I know how to. As a hedge, you could go out and you can invest in a local. Let's say there's a REIT as an example that exists in the same market you're in. Let's say you're in Calgary. You could invest in a REIT that focuses just primarily in Calgary, and you could just short the hell out of that. A defined short. Where you have a stop loss built in, so you buy and sell a call, but create a spread there so that if there's downward pressure on the prices, then your stock portfolio will go up a bunch. That's all I could think. You take like 30 grand and do that on the side, or even 5 grand and short it. And it's like insurance. And then if the market goes down, you've got insurance. If anyone can think of a way to do it other than the public markets, I don't know of any product that exists. I don't know of any insurance product that exists that guarantees downside. Buy stuff that cash flows so that you don't have to sell during the dip. Just hold and wait. Mike is wondering, what's your view on college? Is it a good choice when investing into real estate? I don't think college is a good fit for like 80% of people, maybe 85% of people. I think it's a waste of money and time. More importantly, time. The money is like, okay, it's going to cost you some money to go. The real issue is the time. You spend 4 years for a degree. You could have spent 4 years building a career and have 4 years work experience, which again is more valuable than a degree because you're in a job with 4 years experience, especially if you pick the right job, like going into the trades right now. And over those 4 years, you could have made, say, $50,000 a year. That's $200,000 you'd be up, plus the cost of your schooling. Now, if you invest that, don't touch it, and compound it over your lifetime, we're talking $3 million of retirement. Just don't go to university. You have $3 million in retirement. plus everything else you can earn from age 21 onwards. I'm just talking about just in that 4 year. You ends up being millions, multi-millions ahead in the long term if you're able to have that ability to delay gratification and work and put that money right into an investment vehicle instead of going to college. The problem is the people who don't go to university often just blow everything they make. That's pretty much everyone though. Like most people don't save anything. They save very little percentage of what they make. They spend it in this consumeristic culture. It's a real toxic, horrible culture that we live in today where we're incentivized to spend. There's like this consumeristic ideology that's ingrained itself into our culture so that, you know, we're encouraged to live paycheck to paycheck. And part of it is large corporations spending a ton on marketing to continue that cycle because it's profitable for them. Another part of it is just a change in our culture not to favor delayed gratification and hard work. Some people blame the system. I blame the people. It's probably a blame of both. Our system definitely needs fixing. But I would rather just grab the bull by the horns and say, hey, you person who's in this trap right now, I can take you and change you. I can't take the system and change it, but I can change anyone watching this right now from in debt to wealthy by following a set of rules. Any person can do it. Part of the problem is the system. The education system's terrible. It doesn't design us, or it isn't designed in a way to help us prevail and reach financial independence. It's designed to keep us workers and in debt and consuming. But yeah, I don't think that college necessarily benefits you at all. I think you'd better off going to a trade if your goal was real estate. But I went to university, probably wasn't the best call. I used my degree for 3 full-time years after graduating, working in consulting, and that was it. And I mean, everything else I learned, I could have learned. Yeah. Thoughts on Ford's March deadline to lift all COVID mandates? I'm pro lifting mandates. I've always been against the mandates. I'm still against forced vaccination too. When I look at the data and I look at it from all the sources and I try to look at it from the left and from the right, and I try to just look at all the statistics, and I've now spent a lot of time because people send me a lot of information. And I have a lot of followers who are strongly opinionated on both the left and the right. And I don't know why this has become a political issue, but it has. This whole COVID crap has become a left and a right issue. And it's just such that when I look in between the two Venn diagrams, a commonality, like some stats that stand out to me. One, the vaccine is somewhat effective. That's just a fact. It is effective in preventing chance of death and severity of symptoms, which again reduces the spread of COVID. Vaccine is good. Again, I'm not pro mandating it because people have, dietary issues. Maybe they have allergies or something. Maybe you're a 22-year-old male who's at high risk of myocarditis, which is dead heart tissue as a result of the vaccine. There are risks with it as well. I'm not going to pretend that, if you look at all the science, there are thousands of cases right now open of people having side effects, permanent, life-changing side effects as a result, right? So the vaccine does carry some negatives with it too. Do the benefits outweigh the cons? If you're 60 or 70 years old or over 50 or even in your 40s, probably the probability of getting COVID and the probability of dying from COVID is enough to warrant getting the vaccine, I think, and taking that risk of some of the side effects. And there may be side effects we don't know about. In 5 years, you might find out the heavy metals and whatever, and it caused some issue, right? Whatever, we don't know. We just don't know. There are current side effects we know right now. They're downplaying them. When someone dies of a second dose of vaccine, I know someone personally whose dad died. I know someone else whose son is in the ICU right now as a direct result of getting the vaccine. That's not being talked about. There's no media coverage of that at all. I find that interesting. That someone will have stage 4 cancer and be ready to die from a gust of wind, and they'll die of COVID, but they won't label it a death of cancer, and it'll be all over the news. But someone who's perfectly healthy will die from the vaccine. There's no coverage at all. I get why. The people who are in control, which is typically the older and wealthier people, they're at high risk. If you are a 70-year-old person, double vaccinated, you have a higher chance of dying from COVID than a 25-year-old unvaccinated. Let's get that through, because I know there's a lot of hate. There's old people who are just hating on these young people who are not getting vaccinated. You know what? The old person going up to the restaurant with no mask on, double vaccinated, is at a higher risk of spreading and dying. That's the science. They have a higher chance after the vaccine still of dying. That's just a fact. So we're trying to vaccinate these kids to protect these old people. And that's just the fact of it. The young people are not really at risk. But again, everyone has their own choice. And if they want to get it, it's like the flu shot. You know, I was pro the flu shot before too. Like everyone should get the flu shot if they want to. But I'm not about holding kids down and injecting 6-year-old kids with the flu shot. Like kids are going to get the flu. It's going to be fine. I know so many people who have had COVID, like dozens of people who have had COVID and they are fine. It was fine. There was no issues. Look at the stats. Look at the stats of how many healthy individuals under 30 have perished from COVID. Very few. Very few. Thousands died of the flu in 2019. But a couple hundred will die from COVID and we're losing our mind, right? I don't know. I have some close friends of mine who had it twice now, have had COVID. Natural immunity now. Should they have to get the shot now if they've had COVID twice? And both times they were fine, and now they have a strong natural immunity to it. I think they should be exempt. Sometimes I know another person who's super sensitive. They get any vaccine, even as a kid, they get like flu shot, whatever, and they get like hives and have huge issues. That person should be exempt too. The risk to them is higher than the benefit. That should be their choice. Again, especially in a private 2-tiered medical system, which I believe in strongly. I think there should be a support system there for people who need it, and there should be a private option. I should be able to choose if I want to not get vaccinated. That should be my choice. And if I get it, I should be able to get private care if I want. Cost the system nothing. If I quarantine and keep it to myself, I'm hurting no one. It's my choice. I could choose natural immunity. I think that's a choice everyone should have. I don't want to get into politics any more than that. I'm just going to stop there. But there are some websites you can check out. There are like 12,000 open cases of people who have been vaccinated and then had severe complications. I don't know who's paying to investigate all those. Probably no one. The government wouldn't pay for it because they've already made the decision now to vaccinate everyone and mandate that. So if it was proven to be wrong, there'd be some major lawsuits and blowback. So there would be no focus on looking into that at all. And the pharma, who's paying for the whole thing, they have, again, no incentive at all to look into any negatives. Only positives and force it on everyone. That's the profit motive. So that's the scary thing, is just the history of the government fucking with people in general, killing people over the last decades. Like they just have a horrible history, and so does Big Pharma. They have a horrible history. So I would love if there was an independent body paid for that could look at this, that was not taking bribes from people who are pro vaccine or part of that whole thing. I want everyone who wants to get it, because the probability of complication, to me, from what I'm looking at, looks like less than 1%. So you have a 99.9% chance of being just fine when you get vaccinated. So don't be afraid if you've been vaccinated, whatever. If you're going to get it, no big deal. But you also have a 99.9% chance of nothing happening from COVID. That's just the facts if you're under 40. Like very, very low latent effects too. If you look at the latent effects, very, very few people long-term impacted. There are a few, and we hear about those cases, but it's like pneumonia. Yeah. I'm going to keep moving on here. I don't want to harp. I want to get this show over and get in the hot tub tonight. We got the swim spa going, so it'd be nice to go for a swim in the warm waters. Hey Mike, does margin trading affect your credit score? I've heard using IB and levered up hard. No, interestingly, one of the great things about Interactive Brokers is it does not, especially if you're in a corp. Put everything in a corp and then use Interactive Brokers, no effect on your credit score. You can put $5 million in stocks in there and borrow 70% loan to value on that, which is $3.5 million out. And you could take that right out of your corp, borrow that at 1.2% prime minus 1% on your stock portfolio, sell no stocks, pull that money out if you want to fully lever. By the way, that's assuming you have options to protect against downside, so you can cover any margin calls. I'm just assuming that's how your portfolio is built. Then you could max out your leverage. Let's say you didn't have that, then maybe borrow half of the available. So if you have a $5 million stock portfolio, borrow $2 million from Interactive Brokers. No impact on your credit score at all. They don't even report on it. It's within your corp. Interactive Brokers does not report at all, as far as I know. I know right now I'm borrowing from Interactive Brokers and there's nothing, no impact on my credit score at all, which is awesome, because if you do it through the bank, they're gonna set up a line of credit and they're gonna register on your credit bureau. So it's a much better way, and there's no approval process. It's put the stocks or money in, boom, instant approval, no matter what, the same rate for everyone. Interactive Brokers is the best thing since sliced bread. There is no other brokerage that comes close to Interactive Brokers. Yes, I own shares. Actually, no, I think I sold my shares off. I should buy shares again. I like Interactive Brokers. I'm gonna buy shares again. They're a great company. I don't know how they make any profit though, landing at prime minus 1%. They make all their fees in the trading fees, which again, a great platform. Huge fan of it. Hit me up if you want a link to join. I think I get like $50 or something if I refer people to Interactive Brokers. It's not about the money though. Like, you don't even have to refer to me. They're the best platform, hands down. I've looked at all the platforms in Canada. They're by far the best, by a long shot. Thoughts on dropping a large sum in the S&P 500 now instead of dollar cost averaging, assuming a 10-year hold? So Daniel, I think that it's best to dollar cost average on red days. That's been my approach. If you see a big day, if we get a day where there's more than a 2% dip in the S&P 500, that would be a great day to start dollar cost averaging in. That's just me. I like to buy the red days. So I will wait patiently until there's a pullback and then get in. That's just who I am. That's just me. But yeah, I mean, 10 years from now, who cares? Whatever the prices are now, it'll be double at least 10 years from now. It's just how it is. Can I teach you how to, DW, can I teach you how to trade options? I definitely can. In a future episode, I could definitely go through all that. Not in this episode because I got to wrap things up. So next time. Can you please talk about properties that are selling now? Is it cash flowing with market price? Ruben, yeah, the properties I have are all cash flow positive even with market price. Yeah, especially if we got a conventional A-lender bank. Daniel says, thoughts on dropping a large sum? We did that question. I've got someone says 75 Lucky Cat says I've got a net worth of 2 million, but over half of it is equity for my principal residence and 2 rental properties. Would you recommend refinancing to invest or work on paying them off? I would definitely not pay them off. Do not pay off your properties. The equity trapped in your rental property portfolio is crushing your portfolio return. I can guarantee if your property's at a 6 or a 7 cap rate and it's more than 50% paid off, that you're getting at best a 10% return, which is not great. I would much rather see you relever that property, still get that 10% return, take that capital, borrow it at 1 or 2% right now, and invest it elsewhere at say 10%, and make the spread 5 to 1. That would be a much better use of your $2 million. You could probably be making $300,000-$400,000 a year on a $2 million net worth if you allocated it with leverage effectively. So put that money to work, and you could be retired right now. If you aren't already retired, maybe you have lofty Fat Fire goals, which is cool too. Fat Fire is cool. Lux Fire, as I like to call it. I rebranded Fat Fire as Lux Fire, and it kind of took off for a minute in the local communities. I saw other people using the term Lux Fire. I was the one who made that up, so I don't know if it's continued to stick around. But are you bullish on tech companies like Apple, Amazon, and Google? I never hear you talk about individual stocks. So today, interestingly enough, I sold my position in Google and Amazon. I am bullish on Google. When Google was down, today it was up almost 7%. So I cleared out what shares I had. I probably will average in dollar cost back in. I just saw a 7% jump today, and I thought, wow, I bought it when it dipped. So it was up about 15-20% since I had, maybe 15% since I got, or 12% maybe since I gotten into it. I love Google. I love Facebook. I love Amazon. I don't love Twitter. I have a little bit of Twitter, but I don't like Twitter that much. It was down today, so I nibbled a little bit. I like, companies like AMD and Intel, especially with where things are going with crypto. We need those processing in the EV market. We need those chips to power the future. And so I'm bullish on those companies. I like the AI stuff that IBM's up to. I think that they're slightly underpriced right now. Yes, I have tech in my portfolio. I don't have Pinterest. I don't know. You could ask me anything. I do invest in individual tech companies. So yes, I do like tech. I don't talk a ton about it. I'm super bullish on Amazon. I think Amazon will be equivalent to $10,000 a share at current pricing in the next 10 years guaranteed. I think Facebook equivalent of $700-800 a share in the next 10 years guaranteed. Google, $10,000 a share guaranteed. These guys are lions. They're mammoths. They are at the forefront of not only being a large blue chip, safe place to put your money, but they're also on the trend of growth. And because they have that huge monopoly and a ton of political capital, they're not going anywhere. And so it's a safe place to park your money, and it's a great place for growth, I think, to place your money. We're still on the, I'd rather be betting on the change, the future we're going to have in the future. And I think that they're a big part of that. Likely, even if they aren't, they'll acquire whoever is a big part of that. And so, yeah, of course I'm bullish on tech. Is it my whole portfolio? No. I've got a ton of dividend stuff. But yeah, I like tech. Favorite crypto ETFs? I don't have any. I don't own, my crypto exposure is not through, oh, okay. So I like, I had a little bit of shares in Coinbase and Riot and Mara, and my favorite is Hut 8 Mining. They're Canadian. They do a lot of crypto mining here in Canada and out of Alberta. They're great. They've gone up a lot. I had shares at $3 and now they're $15 a share. I wished I had held. I sold my shares at like $5 or something. It hurt. I have the most paper hands. Like I get a little gain, I get a taste of like a 30-40% gain. I'm like, oh, I'm out. But then I hold the bag on these losers forever. So that's one of my fatal flaws. Okay. My friend had Steven Johnson syndrome from the vaccine. Yeah, I mean, there's lots of testimonies like that. Harriet says much more likely to develop myocarditis from COVID. I actually haven't looked at that data. I'd be interested to see if the latent effects, what the probabilities are. I think if you're a young male, that might be a different probability of it happening. It's mostly affecting like 18 to 28-year-old males, the myocarditis. Couldn't even tell a story on Facebook. Facebook banned for posting it. It's been really bad. The social media platforms, which is how we communicate, Instagram and Facebook, are banning any sharing of, I could die of it, and they would block my ability to share it. It's crazy. I think that censorship is horrible. Catch the replay. Hey, William, thanks for jumping on. Good to see you. Moving to a small town with lower cost of living, but higher pay in order to reach FIRE. Yeah, I would do that for sure, and then move out of that place. Yeah, if it gets you closer to FIRE, do it. Do you pay tax on rental income? Yes, you do. Christian says, real estate or stocks? Both. You recommend 2 times leverage. You can only sustain a 25% drop in that case. Isn't that way too much risk? Is that because you have millions of lines of credit? So Harriet, you got to remember that you have the choice as it drops to react. 28.5% doesn't happen overnight, right? So if you see that we're going into a recession, the first thing whenever I see a dip is start buying the VIX. You can insure yourself. Take some of your line of credit and go buy the VIX, which is the volatility index basically. During COVID, it spiked 10x. So you could put, let's just say put $100,000 into the VIX, which tends to trail like this in good markets and have spikes on days of volatility. But if we go into a recession, you might have 5% of your portfolio in VIX. It's just like an insurance piece. And if you have a 28.5% drop, I can guarantee you the VIX is going to be up 1,000%. So you have 100,000 in there. Guess what? Your VIX is now worth $1 million. You sell your VIX, you pay off your line, and you double down on everything that's down 28%, right? So sure, there's a bubble. I think, yeah, Tesla's a bubble. There's lots of tech companies that are in overvaluation period. But who knows? With the inflation we're seeing right now, we could see revenues continue to grow and valuations to continue to be high as revenues continue and profits continue to over deliver what we were expecting originally for these companies. So yeah, thanks for the time. No problem, DW. Happy to help. We live in the matrix. You don't mean the matrix like the real estate realtor login, do you? That's the place where we go to get information as realtors. Sometimes I wonder if are we actually here? Am I a simulation? I don't know. When you're the financial partner in JV agreement, are you walking a thin line with mortgage fraud when the mortgage is only in your name? How did you do JV opportunities? I don't think so. No, I think it's fine. You can have an off-title bare trust agreement, and it's totally fine. You could, in theory, buy the property and then JV it the next day. In the same way as you could buy a property as your primary residence, and the next day change your mind. You get primary residence financing, you intend to move into it, they give you a lower interest rate, and they let you put less down, say 5% down or whatever, to owner occupy, and then next month you could change your mind. And the mortgage is still there, and it's all good. You're legally allowed to change your mind. Life happens. You get a job somewhere, or someone gets sick in your family, whatever. You're allowed to then rent that out. So your intentions can change, and that's not mortgage fraud. That's just life happening. So it's all about intention. It's all about the narrative that you've set up. So no, that is not illegal. It's not illegal to JV, and it's, to my knowledge, not fraud in any way to have a partner on a property, especially if you sign the JV agreement after close. There would be nothing wrong. I don't know. That'd be a good technical question. I know lots of people do it, like thousands of people do it. So maybe it's just a widespread thing that everyone does. I know no other way. You can set up, there's lots of ways to JV. You set up a corp together, both be on a corp. That's one way to do it. One person could hold title. You could put on title after. You could register the other partner who's not on title could register a second mortgage for their equity interest on title. Lots of ways you can JV to protect yourself, but get on title. most important thing. The worst JVs I've ever done were ones where they hold title, I didn't, and I had no control and got screwed. I've never been screwed where I'm on title. Fact. Where I have a second mortgage on title protecting my interest, where I've registered a bare trust agreement on title, where I'm actually on title, in all those situations, or where my corp is on title, or we bought a corp together and we're on title. Being on title is important. Either register a second mortgage if you're not on title, and then you've got on title to protect. They can't refinance, they can't sell it, they can't do anything without your sign off as a second mortgage holder, or just get on there with actually get on title. I can understand why being on title personally would mess up your qualifying, so don't do that. Do it through a corp. But lots of great ways you can get in there and joint venture, but don't make the same mistake that I have. I've made lots of mistakes. That's why I have this channel. I'm out millions of dollars for mistakes that I've made joint venture partnering. I'm the king of failures. And because I've had so many failures, look at my stock portfolio. I've learned a lot from that though. And the next 10 years, I'm gonna have a great run because of some of these mistakes that I had to learn the hard way. And you can hopefully learn those mistakes from me. All right, everyone. Which brokerage do you recommend? If you obviously weren't watching a second ago, but Interactive Brokers, IBKR, they are the best. Hands down, best brokerage in Canada. Hit me up for the referral code on Instagram at Mike Rosehart. Remember, the secret to unlocking a wealthier you guys is 3 levers in your control. Spend less, earn more, and maximize returns on the difference. That's it. That's mastering the game of personal finance. It's a lot harder to implement it than it is to say it, but I keep saying it so you guys can keep saying it to yourselves. Spend less, earn more, and maximize returns on the difference. And someone asked me if I'm still frugal, as you build wealth, it becomes the inverse of importance. It's about maximizing returns, earning more, and then spending less becomes the least important. Once you have a huge net worth, then your 1% change in your portfolio return will have a much bigger impact than a 10 or 20% reduction in spending, because you only spend so much if you're frugal like I am. And yes, I'm still frugal, but has it creeped up a lot since it was before? My spending, yes, for sure I spend more. I have 3 young kids and a dog, etc. So my mom lives with me too. So there's I have a lot of dependents. So yes, my expenses are higher than maybe others. But, all right, everyone, have a good night, and I'll see you next week and on Instagram at Mike Rosehart.